हाय, मैं हूं अपूर्व शेठ और मैं स्वागत करता हूं आपका इस बहुत ही स्पेशल कॉन्वर्सेशन में, जहां हम स्वागत कर रहे हैं सूला वाइनयार्ड्स की मैनेजमेंट को। सूला वाइनयार्ड्स का आईपीओ खुल रहा है 12 दिसंबर 2022 को और बंद होगा 14 दिसंबर 2022 को। इशू का प्राइस बैंड है 340 से 357 रुपीज पर शेयर। मिनिमम जो बिड लॉट है वो 42 इक्विटी शेयर्स का है और आईपीओ की साइज अप्रोक्सीमेटली 960 करोड़ रुपीस की है और आईपीओ प्रोसीड्स पूरी ऑफर फॉर सेल है। तो कंपनी की ओर से बातचीत करने के लिए हमारे साथ जुड़ रहे हैं चैतन्य राठी जी, जो कि चीफ ऑपरेटिंग ऑफिसर है, और बिट्टू वर्गीस जी, जो कि चीफ फाइनेंशियल ऑफिसर है। मेरी टीम से बातचीत करने के लिए जुड़ रही है उर्मी शाह। सो gentlemen, welcome to our show. We are pleased to have you here.
Thank you, शुक्रिया.
Thank you so much.
Thank you. So मेरा सबसे पहला सवाल आपके लिए ये रहेगा कि what makes Sula Vineyards special and different from other businesses and peers?
So I'll take that. Sula Vineyards, what makes it different is, I think, simply one answer is quality. I think that has always been the focus of our company, is to produce the best quality wines that can be made in India, and we have been the pioneers in doing that over 20 years plus today, and very proud to say that today many of our wines have won awards internationally, not just in India, but many awards internationally, which basically speak about the great quality of our products, and we will continue to build on to that.
Okay, so why is the company not raising money along with the OFS?
So I'll take that one. So the company, in terms of its overall margins and profitability, is on a good trajectory coming out of the pandemic. And we believe that our current financial situation and the way it will be forward, we can fund our internal, all our expansion plans from internal accruals as and when required. Also to note that in the last few months, the promoter, Mr. Rajiv Samant himself, has invested certain amount of money in the company. Plus, we all as employees of the company have exercised certain ESOPs, which has brought in sufficient capital into the company in the current year.
Okay, so hi, sirs. This is just the question that actually the promoter holding has been going down. So what's the reason behind that actually? If we see that the promoter holding has been going down.
Urmi, I wanted to ask you from which period to which period are you talking about? Because in our calculation, the promoter holding has actually been going up over the last few years. Because promoter has been investing in form of direct equity as well as in form of warrants into the business. And today he holds close to 28% of the company. And even post listing, he will continue to be 26% plus and be the single largest shareholder in the business.
Yeah, also to add, just as I mentioned, if you look at the RHP and the capital built up, you will see that 1 year back or even 2 years back, Rajiv Samant himself, only Rajiv Samant, had a promoter, had an equity holding of around 22.8%, which has gone up in the previous year. And in the OFS, he is selling a very small portion as compared to the overall OFS size.
Okay, so actually my next question was regarding your D2C touch points, which are in Nasik and Bangalore, if I'm not wrong. And you even have exposure in North and Eastern North. You're a little concentrated in Delhi, Punjab, Haryana. So do you intend to open any touch points there or anything of that sort?
So, Urmi, our D2C touch points are basically our own selling outlets at our estate vineyards. So we do have estate vineyards in Nasik and we have estate vineyards in Karnataka, 2 hours from Bangalore. And that is where a bulk on pretty much all of my D2C happens. Just to put it into perspective, we are probably the single most visited vineyard in the world today, right? We are expecting about 3.5 lakh visitors to come and enjoy the vineyards and taste some wine, and that is our key D2C selling touch point. Whereas grapes don't really grow in the north of India, so Delhi and maybe the east of India, there we do continue to sell our wine, but we don't have any direct consumer touch points.
Okay, so you all do not have any company-owned shops over there as such?
No, we are working very closely with our distribution partners, with our retail partners who have always been very supportive and have helped us build this really good network over the last 20 years, and we continue to work with them, and they continue to work with us to grow the business.
So how are the margins in company-owned shops versus the distributor-owned shops?
So, of course, the company-owned shop margins are far better because, there are no middlemen per se in those shops. But having said that, like I said, mentioned to Urmi as well, there is a limitation in having company-owned shops. We generally do it at our own vineyards and at, the places where we have consumers coming directly to taste our wines. Whereas everywhere else, we are working with a whole host of partners, both distribution and retail, as well as HoReCa. So we do work with a lot of hotels and restaurants as well. And we are pretty much present across the entire country. Every single state where alcohol is sold in India today, Sula's wine is also very much.
Also to add, Apurva and Urmi, what happens is alcohol beverage is very different from any FMCG. We have state-wise regulations, and every state has got their own model in terms of how the alcohol can be sold. Wine is no different. We do enjoy a lot of regulatory tailwinds, but still the regulatory framework is there, and hence setting up model shops per se in across various territories would completely depend on what is the regulation or regulatory environment in that particular state. Our own vineyard, it's possible to do that, and we are having appropriate licenses to do the same.
Now, climate change has led to erratic monsoons, and grapes tend to rot if the rains are there's sudden rains out of the blue. So, what is the company's plan B in such a scenario?
There are a couple of things, right? We have to remember that the table grapes that we eat are fairly different from wine grapes, though they come from the same family. Wine grapes generally tend to be more hardy and more resistant to climate vagaries. We are also spread across the state of Maharashtra as well as Karnataka. So our vineyards go from all the way from Nasik towards south of Maharashtra and then into Karnataka. So we have a fairly nice geographical spread, right? Thirdly, we have a very good, solid viticulture team that actually works very closely with all our farmers, gives them best practices, helps them for taking care of their vineyards, and making sure that at any point of time, if they're facing any challenges, our team is there to support. Given all of this, we do have a fairly good mitigating process in place today. But yes, of course, if there is very freak weather, there will be some losses, but company is very well placed to take care of that, because we generally do crush a little bit more in good years so that we have buffer wine in any case of calamity.
Now, the cash conversion cycle has been consistently increasing, and is much higher compared to a lot of your peers. So I think it is about 347 days or so. So any comments on these? Why is it high, and what are your plans?
Apurva, I'll take that. So cash conversion cycle, you are right, it's very high, and but I would rather like to put it looks very high. And the reason why it looks very high is the typical nature of business that we operate in. Harvest for us, the wine harvest happens only in Q4, January to March of a particular financial year, and we have to harvest for the entire next year's demand as we foresee. So the numbers that you will look is always on a backward 12 months number, whereas the forecasting happens from a point of view of what the business looks like for the next year. So you will carry a higher amount of inventory at the end of March. Also, the DSOs or the receivables per se are on a higher side because of the range of products that we distribute across the lengths and breadths of this country. Compared to the listed peers that you look at, those peers we are talking about primarily of companies like who are into spirits and beer. For them, the entire turnaround cycle from a production to the table is much lesser, and hence the cycle remains low. For us, seasonality also is different. We sell, the highest seasonal quarter for us is Q3, as we are sitting right now, which is a time for all festivals and everything. And that's when we sell more, and my inventory gets depleted by Q3. Then we again build back the inventory. Also, as CR mentioned, we are very cognizant of the climate changes and the climatic conditions. So any particular year, and if you look at FY22 in particular, the entire inventory holding is gone up because that year we could find a good harvest, and hence we create an extra buffer which kind of evens out over the next few years.
And just to add to that, even through all of this, we are in a very fairly healthy cash position. The company is not raising any equity, as we already mentioned, and company is very comfortable with where we are in terms of our cash position, and we continue to keep a very close eye on it. And wherever we have the possibility to improve, we do continuously work on that.
So your elite and premium brands contribute a higher share compared to others. So what are its margins for the category, and how do you plan to expand the same?
So our gross margins typically for our elite and premium wines are upwards of 75%, very healthy gross margins for these category of wines. And, premiumization is a story that Sula has always believed in and has always led. So we have always been very focused on quality, like I mentioned before. And, quality is very adequately reflected in premium and elite wines. And that is where we continue to focus, and we will continue to grow that part of the business very consciously.
Okay, so my next question was the debt to EBITDA ratio has been lower than its previous levels, but it still remains high. So what are your plans to reduce?
I think debt to EBITDA ratio of 2, I would not call it a high debt to EBITDA ratio. Our debt to EBITDA during the depth of the pandemic or just before the pandemic hit went up to around 7x. And from there, we've come down to just below 2, or rather 1.97, as we say for FY22. And from there onward, we only see it going down. Even if I were to keep a moderate level of debt in my books, with the EBITDA expansion that we are seeing, the debt to EBITDA ratio will come down. Most important factor to note actually is from the time we filed DRHP to now, till the time we filed our RHP, we actually have got a credit rating upgrade. Okay, ICRA has upgraded our rating to long term to A plus stable from A positive. So that's how the entire outlook is, and I believe that these kind of debt levels are sustainable and actually good from the company's point of view.
Okay. And next would be, what are the export opportunities for the company?
I think Sula will continue to focus on India. India is very much our home market and we are the market leaders out here. So our focus is very much on growing wine in India. India is one of the largest populations, but the lowest per capita consumption of wine. So the opportunity in India itself is so large that, exports is not really our focus. Having said that, we export to almost 20 odd countries today, including European and American, countries as well. And our wines are very well received out there. And, quality, like I mentioned right at the beginning, we have won multiple awards every year, international awards every year for our wine quality. So, export is an opportunity, but I think India is a far, far larger and more exciting opportunity.
Oh, fair enough. So on a similar lines, the RHP states that the wine market growth is projected to be around 14% from FY22 to FY25, a CAGR of 14%. So what do you think where do you expect this growth to come from?
I think that 14% is volume growth. Like I said, premiumization is a very, very strong story. So if you look at the RHP, there will also be another number of about 24%, which is value growth. And that is the more exciting number for us, because along with volumes, we are also expecting a lot of premiumization and taking some price increases over the next few years. And, these are numbers given by Technopak. They are a very reputed research agency. And we have absolutely no reason to, question these numbers. We do believe that these numbers are very much possible.
Yeah, and Urvi, you would agree, with post-pandemic, a lot of cultural changes have happened with people, resorting to home consumption. The entire thing about, ordering your favorite wine and consuming it at the comfort at your home at a much cheaper cost as compared to what you would get in a restaurant. People are trying newer premium wines and enjoying it at home. So these are certain trends that we've seen, and we believe that this may continue.
So I had one question. So the alcohol market is primarily dominated by spirits and beer. So, and wine has a very minuscule percentage. So the scope for growth is huge. Now, I just wanted to know, where are these wine drinkers coming from? So who are these people? If you can give a flavor of these people.
I think wine today consumption is much more broad based than it has ever been. Today, if you pick up any OTT channel, Netflix or an Amazon Prime or a Sony Live, you'll always find some show or the other where wine is consumed on that show itself, right? It has been largely an urban story, but even a show like Mirzapur, if you have watched that, which is, situated or shot in rural UP, there is wine consumption being shown in a show like Mirzapur as well. So it started off as an urban story. The growth has come from urban India, but it is percolating into rural India as well today. But we are still very much of the opinion that for at least the next 5 to 10 years, urban India, tier 2, tier 3 cities are the ones that are going to drive the growth of wine. And especially one last thing is the emergence of women drinkers. Women naturally are gravitating towards wine as their preferred drink of choice. And when they choose to drink, they typically choose to drink wine.
Also to add, as you mentioned, spirits spirits and beer is what people think as a go-to drink. But if you were to look at the data that, even Technopack has taken out for the year FY14 to FY19, wine has actually grown faster than the IMFL market per se. Wine probably has grown at around 18%, whereas spirits have grown at around 12%. So overall growth that we see from a alcohol consumption strata point of view, a lot of consumption is moving towards wine.
So the IPO is coming at a P multiple of more than 50. Now, do you think there is enough on the table for the investor?
I think that is something for the investors to take a look and answer. But we do believe it's a fairly healthy price, and I think investors will be able to give an answer. It's the month of December, a lot of celebrations happening, and I'm sure people would like to drink a glass of wine along with seeing Sula getting listed.
Okay, thanks a lot. We wish the
Thank
team
you.
of Sula Vineyards all the best for your listing.
Thank you, Apurva.
Thank you, Apurva. Thank you.
Thank you, sir.